What we see right now. What we see is a company that's been on the AI roller coaster for a while, sometimes the front car, sometimes the middle, sometimes the emergency brake. Lately SMCI, super microcomputer, has been doing the awkward two-step. It's one of the market's trending AI hardware names and it's underperforming broad tech benchmarks. That contradiction makes the stock a perfect story, lots of drama, lots of noise, and, if you're patient and thoughtful, a few real lessons about sentiment, execution, and how Wall Street values complex hardware businesses. Let's begin with the scoreboard. Over the past 52 weeks SMCI has risen about 4.9%, while the S&P 500 returned 16.9% and the Technology Select Sector SPDR, XLK, returned 26.4% over the same period. That tells you something important right away. SMCI has not participated fully in the market's broader tech-led rally, despite being an AI-related name. In plain speak, the market has judged SMCI's risk-reward differently than it judged the rest of the tech complex. Imagine two athletes training for the same race, one, XLK, boosted by a new shoe and crowd support, the other, SMCI, still limping along with a promising knee brace. Both are capable, but the crowd's money flows to where the confidence is. The Goldman Sachs headline, "What changed the tone this week?" What I have observed is that the mood swings in SMCI often start with a note from a big brokerage. This week's headline maker was Goldman Sachs initiating coverage with a sell rating and a $26 price target, a move that immediately tightened the narrative and drove the stock down more than 5% in some sessions. The analysts' concern centered on margin pressure and profitability visibility in Tier 2 cloud markets, essentially, whether SMCI's top-line AI momentum actually converts into sustainable earnings. That skepticism has a short, sharp market effect. Traders and quants see a new short rating and some of them press the sell button. One big name saying, "Sell," is like a referee blowing a whistle during a match. Momentum pauses, and the crowd reacts before the full replay even finishes. The analyst mosaic, consensus is complicated but mildly constructive. What's interesting is that the analyst crowd isn't unanimous doom and gloom. The consensus view is moderately bullish, often labeled moderate buy or hold depending on the source, with about 19 analysts covering the stock, roughly 8 buys, 8 holds, and 2 sells in some compilations, with average price targets in the mid-$40s, approximately $45 to $46. Different aggregators report slightly different averages. That consensus implies a pretty sizable upside from current levels, roughly 40–47%, if the average target were to be realized. So the street is polarized, big skeptics on one side, believers on the other. In plain English, the market looks like a school cafeteria where half the kids think SMCI is the coolest thing since pizza and half think it's still peel and eat shrimp. Both groups are loud, but neither necessarily right. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. We've been tracking how price targets have bounced around. Raymond James trimmed a target from $53 to $50 back in November. Needham cut a target from $60 to $51 but kept a buy stance. Barclays trimmed its target into the low $40s and kept an equal weight view, and Zacks moved SMCI from strong sell to hold in December. Different analysts are playing different tunes, some more cautious on margins, others upbeat about long-term AI demand. The spread of targets, a low in the mid-$20s to a high in the mid-$60s, tells you the story is not settled. It's like a movie that critics can't agree on. Some think it's Oscar bait, others think it's a cult flick. Box office, i.e., actual revenue, is what finally settles the argument. Why the sell side cares about margins, the SMCI profit puzzle. What I've observed, and this is critical, is SMCI's product mix. They're a server/storage company that's been delivering bespoke, high-density AI rack solutions. Those solutions are high margin when ordered in scale by hyperscalers, but they can become margin draining when large deals are negotiated with aggressive pricing or when input costs for components surge. Goldman's thesis is basically, even if demand is strong, can SMCI keep expanding operating profit in the face of competition and large discount deals? Analysts worry that revenue without margin expansion is a hollow victory. Sales growth that fails to translate into earnings growth doesn't make a sustainable investment case. Selling thousands of concert tickets is great, until you realize you sold them at near cost after paying a stadium fee and fancy lighting. Volume alone doesn't pay the bills. What I see repeatedly in discussions with investors and in analyst notes is a pair of recurring fears: execution risk and visibility risk. Execution risk equals, can SMCI actually manufacture, configure, ship and deploy racks at scale without embarrassing delays or margin erosion? That's non-trivial because these are engineered-to-order systems. Visibility risk equals, can analysts and investors model future earnings when large, bespoke deals show up irregularly? When orders are lumpy and margins vary by customer, guidance becomes probabilistic, and the market discounts that uncertainty with a lower multiple. Those two factors explain why sentiment flips on headlines so fast. Running a custom-build shop is different from selling off-the-shelf widgets, forecasting is harder, and surprises are more common. What we observe is that investors benchmark every stock against the market and sector ETFs. If XLK is up 26% and SMCI is up 4.9%, fiduciaries and ETFs allocations get reevaluated. Why am I overweight something that trailed the sector? That simple math drives portfolio flows. When benchmark returns diverge like this over a 52-week window, SMCI becomes vulnerable to rebalancing and relative strength selling, even by funds that like the long-term story. That's a reminder that performance is relative, and relative underperformance sometimes begets more underperformance. It's like being in a group fitness class. If everyone else runs a 5K and you jog a 1K, your coach might ask why you're not matching the group routine. Let me map the crowd for you. A set of high-conviction bulls, some boutique desks and tech-focused funds, believe SMCI can capture more AI infrastructure share and improve margins. A set of pragmatic analysts, Raymond James, Needham, see the opportunity but want to paper over margin squeezes. And a smaller group of skeptics, Goldman, a couple of others, worry that competition and pricing pressure will prevent the company from translating revenue into durable EPS growth. The result: a wide distribution of price targets and recommendations. That's why you see such bouncy price action on news and research notes. What we see when we talk to engineers or look at OEM stories: a hyperscaler will place massive orders for AI racks, but each order can require weeks of bespoke configuration, power, cooling, interconnects, software. That's not a simple ship from stock transaction, it's a project. When a big client asks for last-minute changes, more GPUs, different cooling, revenue timing shifts and margins can change. It's like building a custom yacht instead of selling a speedboat. Sales happen, but timelines and profits are more volatile. For SMCI, that operational reality is baked into the P&L and into analyst assumptions before earnings report day. Note this as well. Do you want peace at heart? John 1:29 tells us that, the next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.